Okay, it's 10:33, and you can see that looking at our 5 minute, uh, we could get our second push down. We are still only at 43%. As my trading plan goes, I'm looking for this to be at least 65% in order to contemplate a trade. But it's also possible that we just stay in this trading range and go nowhere from here. So I decided, just out of curiosity, to put on an iron condor at this point in time because we do have an indicator I want to point out here. Down here, this is called the intraday mood indicator. I think it was Mobius that put this together. It's signaling an iron condor as a possibility here, even though our filter suggested that we're in a bearish opening range. But that bearish opening range filled our gap, and once gaps are filled, price starts to bounce off that. So in looking at an iron condor that I put up right now, I've got a 43.20 short call and a 4200 short put. And we're bouncing around 80-90 cents for the condor with a 64%, 63% chance of breaking even on either side. So I've got it in there. I may hold this in here for a while just to see if one of two things happen. We complete our second move down, or this doesn't occur. And the second thing that I'm looking for is to see what happens on our movement and whether or not we ever reach 65% on that move down. If we do, then I'd probably be putting in a put credit spread rather than thinking about a call at this point. So this is what's being set up. We'll check back. Okay, it is 10:38, and one of the things I want to point out is I did put the break-even lines for that condor on the chart so I can get a visual as to what our price range is and that 63% probability. What I like about the put side is that it is below our dotted blue line for the first hour of trading, and on the call side we're still below that expected range for the rest of the day. So that's something to consider. But if you look at yesterday's high, we are well below that in terms of resistance. So we'll keep an eye on this condor, and right now we can get about 80 cents. So we'll check back. Okay, it's 10:45, and if we go to our 5 minute, we can see that we never got that second push down, and I think the gap fill served as pretty good resistance for further downward price action. And what appears is that we are now getting into a pretty close, tight trading range. So I'm going to remove this second push down because I don't think it's going to happen. And I'm going to set a trading range now that seems to be getting established. And what we're going to be looking for is to see if we break up or break down from this trading range. And we'll check back. Okay, 10:51. And I decided to put a put spread on, and I have an order in place right now for 60 cents. Selling the 42.20 put short. The reason why I like that is because if we look at our 5-minute chart, we have broken out of the trading range, and we could start moving upward from here. It still gives us a pretty good cushion on our expected average true range. So I'm predicting here that if we get any further action to fill the average true range, it's going to be on the upside, not the downside. So hopefully we'll get our 60 cents. Keep you posted. Okay, it's 11:05. We did get filled on our 60-cent spread, put spread. We have a slight pullback on this first leg up. We'll keep an eye on it and see where we go from here. I am going to put in at this point my 10-cent target stop. So let's go to create a, we'll go to monitor tab, and we're going to create a closing order of 10 cents for the day, and we're going to confirm, send. All right, we'll check back. Okay, one of the things I wanted to point out here, again, 11:08, I have drawn a channel line, an upward channel line, with a midpoint between the two. Again, we're following this latest push up, giving us a support line down here. So we'll look at our 5 minutes, see where that puts us in terms of keeping an eye out. If we go below this line here, which will bring us down to the original pivot point, our break even is down here. So we'll just keep you posted as the day progresses. Okay, it's 11:20 coming into the European close. We're getting a slight bounce up. One of the things I wanted to point out is that we are now in this particular contract plus or minus 33 points. So I thought maybe we'd take a look at the chart, and let's clear this. We're at 42.63 right now, 42.63. And if we subtract 33, that gives us 42.30. And you can see right now our break even is at 42.21. So we have about a 9-point buffer here. So I'm feeling pretty good about that. We are now still at, we're gaining a little bit of momentum here. So I'll be checking back as we progress through the day. Okay, it is almost 11:40 after the European close, and we did get a push down out of our extended trading range that I put in. However, we are bouncing off the pivot point, and right now, if you look at our probability of expiring out of the money for our short put, we're at 77%. If we look at the risk profile, we're still sitting in pretty good shape. But we did come close to our 2x stop, but we did not put an order in, so I think it's too early in the day to get panicky. So I'll be checking back. Okay, it is 2:08, and I think I'm going to set my stop target to 20 cents rather than 10. I just don't really like what's going on right now. We had a push up, as you can see here, and then we dropped down with a lot of volume. So The bears seem to still be in control here, which is making me a bit uneasy. Okay, it is now 254. And price started to go against me. My verbal 120 stop was triggered. So we have taken a loss today. My first loss. Better than seeing it go the other way. Just as a post note, if we look at the options chain, I had put in a call spread very early on, around 10:30, after the opening range was triggered as bearish, and I think about 10:30 we could have gotten 60 cents. Obviously, we would have gotten the entire 60 cents on this trade. The trade that we had closed out now is at 120, which is our 2x stop, and it doesn't look like it is going to reverse. The other thing I want to point out is that at the time that I got out, the probably 220, the probability was 23% or something like that. So that's concerned me. That was the first time I've seen a slide that quickly. But theta is our friend right now. So if pricing can just stabilize around this area, you know, I could have gotten out for a profit. So this is a lesson learned for today, and we'll record this session and study it and see you on Monday. Just for fun and future reference, I put in the iron condor I talked about at the beginning of the trading session, where we were going to take in 90 cents and have delta somewhere in the neighborhood of 10 on both the put and the call side. You can see that even though we had a pretty sharp downward trend at the 3 o'clock hour, it's 3:18 right now, we're still doing pretty good. We took in 90 cents. We could close at 25, but I think this is probably something that we could hold till expiration and get the full 90 cents, which would have been a very nice trade. You have to double the commission on that, so you'd be subtracting oh well, if we let it expire worthless, we would only be dealing with $50 in commission. So that would have been a nice trade. It's 3:34, and I just wanted to, for educational purposes, put up that iron condor again. And you can see that, let's zoom in on here. We are now at 60 cents for the put spread to get out of it. We've got 40 minutes to go. No, I'm sorry. We have 25 minutes to go. And price isn't up. Okay, let me just show you an interesting thing here. Okay. Remember that channel that we put in? Well, guess what, ladies and gentlemen? We are bouncing right off of it at the... and that was my major concern, because on our original put spread, this bottom channel line was below our target or our break even on that put spread, and that's what got me pretty nervous. You can see, again, I still have it in my Analyze tab. Right now, if we were to try to get out of that trade, it's going to cost us $2, which would have been a major loss for today. So it's just not worth gambling, and I find that the 2x stop is probably something that I'm going to stick with as we move forward. But again, I'm starting to like the idea of putting on iron condors when the direction of the market really isn't clear at the beginning of the trading session. So that's the way it was today. If we had put that iron condor on instead of the put spread, we would be going home with 90 cents. And that would have been $450 on this trade. And again, we probably wouldn't close it, so it would only cost us $50 in commission. Interesting day. It is 3:41, and we would have taken a bath had we held on to this put spread. However, looking at the iron condor, with 20 minutes to go, we're looking pretty good in terms of expected move on this put. Expected move is now 12. We are at 42.18, and our break even is at 42. So I mean, we could go lower, but I would be comfortable holding this until expiration unless something really drastic happens, but it gives us enough cushion to get out of this trade just by taking off the put spread and easily breaking even without any stress at all, which is something that I'm really liking a lot. And another thing that I'd like to show is in our 1 hour Zoom. Well, no, let's not do the Zoom. Let's do the 1 hour chart. This is the break even that would have been on our chart at about 10:30. And you can see that the break even on the call and the put side is almost, well, the call is outside our blue dotted line and the put is almost on it. So I find this very interesting. So anxious to get back to you on Monday. All right, for educational purposes, I just thought I'd record this. We're in the last 5 minutes of Friday's trading, and we really came down hard, but it looks like it doesn't want to pin at 4,200, but rather 4,210. That's something you got to look at occasionally, is the round numbers on the strike prices. They tend to settle somewhere close to a round number. So we were spared going to 4,200, and now our put side of our condor can be bought back for 20 cents. And if I was well, now it's 30 cents. And let me show you what I'm looking at. Okay, here we are. We're back up to 45 cents. It could pin at 4,200, which would wipe out our profit. So I could, there's, all right, I would probably at this point put in an order for 25 cents and close this put side. And hope to get filled, which would give me 60 cents or $300 from the condor, which still would not be a bad day's profit. But that's a lesson learned here today. You just don't play into the close, because especially on a Friday, you have no idea what's going to happen. We fell through the floor here. So, like I said, a lesson learned. We'll be back on Monday.